Hey everybody, all right, so we're obviously well underway with 2025. Got some of the worst reports imaginable already to kick off the year. Let's go ahead and talk about this because it is terrifying and it is bound to affect a lot of people. A lot of you are subscribers here on the channel, so you're going to want to listen up to this because unfortunately, you know, for new subscribers and those people who have been following our content for a long time, you guys can obviously understand and relate to the impact of credit card debt, just like I can. And in 2024, credit card debt, it led to defaults in the US that hit their highest levels now since 2010, guys. That's literally going back to the Great Recession days. Delinquencies shot up by 50%, and Americans paid a sickening $170 billion worth of credit card interest over the past year alone. We're going to be doing a little bit of off-roading here, guys, so I apologize for the shaky shot here on my face, but we're going to get you some GoPro footage along for the ride again once more. So here's the thing, guys. If this number, $170 billion, feels hard for you to wrap your heads around, it should be. That number is astronomical. And here's the craziest part about it, because I do run a company that has a lot of expenses. I personally spent on just one of my business cards alone over $300,000, and that was just for last year. I'll put a screenshot here on the screen so you can see that. And I went ahead and added up several other cards that were well over $100,000 in spending. And the difference with the way that I'm using these credit cards and how a lot of people do is they're not paying them off every single month, which is key. You see, when you pay your credit cards in full, you'll never pay a single dollar in interest, but you still get all of the benefits of the rewards. So all of those perks are something that I get to enjoy. In fact, I made almost $6,000 alone last year in cash back. And the credit card companies, guess how much they made from me? Nothing. But more and more people are enticed into using their cards in order to get the rewards, and they're not paying off their balances in full every month. Not some of the months, every month. So even though they might make a couple percentage points in cash back or in travel benefits, they're still paying 20, 25, or even 30% in interest. And you're never going to get ahead financially if you're not avoiding high interest debts. You have to avoid them entirely, folks. But it's important that we take a closer look and dive deeper at this situation. How is the news of this crisis going to impact the economy? And perhaps what does it mean for each of us as individuals? What is it going to mean for you personally through 2025 and beyond? Well, bottom line is people are simply falling behind on their credit cards, and it's happening because of a few specific reasons, I think. I think the first thing, of course, we have to acknowledge is the inflation problem. Prices are still very high for your essentials, you know, things that you need to live, like groceries and gasoline or medicines or housing, and people are just swiping their cards in order to get by. But adding to that problem too are the extraordinary high interest rates, right? I mean, credit card interest rates are insane right now. They're averaging 24.37% as of December 2024. And that means that if you're carrying a balance, folks, you are paying more than ever just to keep up. And the bottom line is you just simply have to be paying these off in full every month. And it's not until I actually started to do so myself that I actually was able to get ahead And once I did, I never carried a balance again. That was it. And I think you guys will find yourselves in that same position as well once you finally start to get to that point. Another big reason for this problem right now are stagnant wages. You know, while the cost of everything is just going up, wages really haven't kept pace. For many people, there's just no room right now to breathe without, making some major changes day in and day out and really starting to take back control financially. People are out of control with their spending, bottom line, out of control. Everything from buying a ton of crap online. I mean, think to yourself, how many times did Amazon or any other delivery service pay a visit to your front door last year, right? But I think the real wealth killer are automobile purchases. People are just spending much too much money on their vehicles. And there are very, very few times that it makes sense for you guys to finance a personal vehicle. Yet the average car payment right now in this country has grown to nearly $750 every month, without factoring in insurance and fuel costs and, of course, maintenance on these vehicles. And by the way, maintenance and insurance costs are almost always a lot more money when the car is more expensive. So spending all of this money on these expensive cars is digging into people's ability to grow their cash flow, build up their savings accounts, and of course, invest money. Now, a side note, on a personal level, I didn't spend over $30,000 on a vehicle until I had multiple years back to back of earning over $1 million in a year. And even today, the car I'm in right now is the only vehicle that Jesse and I have. We've lived with one paid off vehicle between us for the past 3 years now. So I only pay insurance of $240 for both of us to have coverage on this vehicle. And I've had absolutely no maintenance on it other than just regularly scheduled oil changes. And now I do plan to replace the tires this year. They've lasted, by that point, almost 50,000 miles, which is fantastic. They will be expensive, but I don't have the drain of a loan that I'm paying interest on. And, being able to keep it at one vehicle for our household has really significantly reduced expenses. Now, I do know that it's hard for most families to do something like that, to find a way to live with only one car. But, that just means that you're going to have to buy far less expensive vehicles if you need multiple vehicles for your household. Maybe find a creative way to do so. If one of you works from home, perhaps. I mean, my parents have lived with one vehicle as well for many years now. And I'm really hoping to see this trend of overspending on vehicles stop here in this country. You don't see this in other countries nearly as much as you see it here. So I'm not sure if people are going to have much choice soon. We may be forced into spending a lot less on vehicles before we know it. Because it's just not in the budget, guys. Now, the next major reason I think for this sort of credit card crisis right now is that people just have no savings, right? Lower income households actually have pretty much burned through their savings. The safety net is simply gone. So when an unexpected expense pops up, which they happen all the time, again, I think you could probably come up with a decent sized list of unexpected costs that came into your life through 2024. That's not going to end, guys. So you end up going straight to the credit card when you don't have savings. Now, what does this really mean for the bigger picture, the economy? This huge increase in credit card defaults and $170 billion worth of interest. This is where things get real, because rising credit card defaults are not just bad for individual households. They actually will ripple through the entire economy. For instance, banks and lenders, they tighten up, right? When banks start losing money on unpaid debt and they have to charge that off, they're going to get stricter. And that might mean that it's harder to qualify for a credit card or loan. Even for people with good or great credit, it will become more difficult to get access to that available credit. It also will mean that there will be a lot less consumer spending. If if more of your paycheck is going towards paying off your debts and high interest, you're going to have a lot less money to spend elsewhere. And since consumer spending drives about 70% of the economy, the US economy anyway, that's going to be a really, really big deal because it's going to spark much bigger recession risks. And here's the kicker. If enough people are financially strapped, businesses make less money, layoffs increase, and we could absolutely find ourselves sliding deep into a recession as a result of these exorbitant debt numbers. These figures and statistics are terrifying. So I guess I just ask myself, well, what's coming down the pipeline, right? And unfortunately, things might not get much better anytime soon, right? Interest rates could be staying high, even though the Federal Reserve has sort of eased up on the rate hikes. Credit card interest rates, they remain sky high. And that's not going to change overnight, my friends. Now, there are regulation battles too. I mean, there's talk about potential caps on credit card interest rates, but that could have side effects as well, like making credit a lot harder to come by. And so that is ultimately a double-edged sword also. Because unfortunately, this isn't just, some abstract economic issue. It's personal, right? And here's how it could directly impact you. Can impact your credit to begin with. If you're struggling to make payments or you're racking up these balances, your credit scores will most definitely take a big hit, and that'll make it even harder and more expensive for you to borrow in the future, and it'll likely drive your everyday expenses up as well. A lot of people don't realize that your credit scores and credit history affect your insurance costs and your utility expenses, and in some cases your rents, not to mention, of course, mortgages if you happen to be in the market and you're still qualified to get a loan, but you don't have perfect credit. It's going to affect your wallet as well, folks. If banks tighten lending, even people with good or great credit, they might see their credit limits reduced down. Banks will actually reduce how much availability you have. And rates will also go up for those too. My rates have gone up even though I have perfect credit. I have 830 FICO scores. Your job, guys, let's talk about that. I mean, if businesses start seeing these slower sales due to decreased spending, layoffs could happen in a variety of industries. And really that just depends on consumer dollars, like retail, of course, obviously the travel industry, restaurants, can be directly affected. We're even seeing people cut back on jobs that they really need to get done for their sewage infrastructure with my drain company. People are just delaying absolutely everything because they don't have the excess capital. We're also seeing much, much lower approval rates through third-party financing to get those projects done. And again, this is what keeps their plumbing working properly, and there's just no money. And I feel like I've said this in the majority of the hundreds of videos that we've produced on this channel since 2011. And that's that you simply have to follow a clear-cut, intentional plan to pay down your debts. And I give you guys some really clear-cut mathematical ways that you can get the upper hand on the banks in some of our previous that I'll link in the description below, some of our most popular videos. It is all still just as applicable and probably even more important today than when it was originally produced. And it's, of course, easier said than done. I know it. I've been through it. But typically, you just have to carefully manage your cash flow to pay off high-interest credit card debts first. That really has to be your initial priority. After that, in times of high volatility and uncertainty, it's really important to build that emergency fund, have money set aside in case something happens so you don't have to go back into debt. Even if it's just a few $100 a month, folks, until you can save 3 to 6 months worth of living expenses, This is very, very important in order to keep you from relying on those credit cards when you're in a pinch. The next thing you got to do is really live below your means. I mean, it's the only way any of that's going to work. You will never establish an emergency fund, much less save above and beyond that or invest money, unless you can live below your means. Spend less than you make, far less if possible. And it's boring. And cutting back on unnecessary expenses sucks sometimes. But it can free up a ton of cash in order to tackle the debt and then start stashing away for the future. And this is best done in accounts that grow. And you can't rely on traditional checking and savings accounts, folks, because the value of those dollars are going to continue to go down with inflation. So your money is worth less and less over time when it's just sitting there because things get more and more expensive. $100 used to feel a lot more money a handful of years ago than it does today, right? And it's amazing how many people just still don't realize that they can get far better returns that are just as safe in high yield savings accounts than in a traditional checking or savings. I also really strongly recommend as an important step that you stay informed, right? The economy can change very quickly. So you've got to keep an eye on interest rate trends and the job market so that you can adjust your finances and your decisions as needed. And remember, you can make quick decisions to help yourself when you have a lot less debt in the way. It creates the ability to stay nimble. Think speedboat versus cruise ship, right? Which one's going to be able to turn most quickly? Now, here's a few more thoughts before I wrap this up. Obviously, the roads are getting a little bit snowy here, so I want to make sure that I'm taking it easy on these mountain roads. Credit card defaults, guys, hitting that 14-year high really should be a wake-up call. I mean, it needs to be scary to you. I want you to feel scared. You can't just put your head in the sand and ostrich head this thing and ignore it and it goes away. I mean, it's a sign that a lot of people are really feeling the pinch right now. And it's a reminder that financial health is in crisis mode for the average American. And this is not a guess anymore. The data is proving it. We're here right now today. We've been warning about this forever. It took longer than I anticipated it would, but here we are. So the big takeaway is that you simply must stay proactive and be in control with your money. You have to. You can no longer ignore it. And the good news is it's not that difficult. It doesn't take a lot of time, and you feel a lot of empowerment when you do it. It's an awesome feeling, guys. The more you do it, the more you're going to love it. You just got to get in the habit. Do it for 1 month. The more you can do to prepare right now, the better off you will be, no matter what the economy throws at us next. Okay, so I do want to thank you guys for watching. I don't like this channel I don't want it to become a doom and gloom, FUD, fear, uncertainty, and doubt type of channel. But I have to make sure that we're announcing these big sort of breaking news alerts so that you can make good decisions. And everyone knows that when there's blood in the streets, there are a lot more opportunities that are out there for you too. So it could end up being really, really good for the people that do stay in charge and do stay ahead of it. You can. These are the times where people tend to make the most money. So let's use these tough times to personally get as far ahead as possible. Leave in the comments below, how are you managing your credit card debts right now? Are you able to pay them off in full every single month? Is that something that you're sticking with, or are you just still working your way towards that and being forced to put a lot of interest money in the pocket of these banks? I'd love to hear it. Let's talk about it in the comments, guys. Do really appreciate you subscribing to the channel. Drop a like if you want me to continue to keep you up to date on content like this. Thumbs down if you don't like the content, of course. Love hearing the feedback either way. Until I see you on the next video, guys, I hope you've enjoyed this beautiful snowy winter mountain drive with me. Make it a great day yourselves and keep on cash flowing, okay? We'll talk soon. Bye-bye.